Today, we'll talk about rallies, how to predict them. How did I predict the last rally before it happened? What are the three major signs? We will do a top-down analysis of detecting rallies. This will be an extremely detailed trading video. Hope you do not miss it. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. With this video, I'll cover the basics of smart money concepts. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. It is important to watch videos in order, so you will not miss anything. Okay people, let's talk about rallies. If you remember, I posted a tweet on the 25th of April and talked about a very big move, a rally coming soon. I was watching three significant signs before this prediction. This gray box is part of it. We will talk about it all. On the 26th of April, a magnificent rally came into play and I took the trade. But why? How did I know? Where did I take the trade? What were the reasons? Let's talk about it. Let's talk about the first stage of rallies, order accumulation. You already know about ranges and what they are exactly. They basically accumulate orders. For example, a big bank could be placing orders in small chunks, causing slow movements before a major rally. It is basically the quiet night before the big storm. I was watching this order accumulation for almost a week. 5 straight days of accumulation. Price was going up and down in this 2% range without rallying. Back in the day when I first started trading options with the Think or Swim platform, I was using the TTM squeeze indicator. It was plotting these red dots when the orders started to accumulate, basically ranging. I knew that back then a rally was coming and the ranges are the most basic sign. Okay, all good, but ranges and order accumulation will only signal you a rally coming. It does not give you a sign of which side, a big move up or down. This is only a beginning phase of a rally. You need multiple elements of signs to come together, like all the stars align in a straight line in the galaxy. Generally, the second sign of a massive rally is institutional level liquidity hunts. Remember, big banks, funds, and investors evaluate charts generally at monthly, weekly, and daily levels. And high frequency bots mostly operate within 3 minutes to seconds. So, if you want to think like big banks, you have to consider monthly, weekly, and daily highs and lows. These are extremely important liquidity and inducement points. This is the weekly chart of Bitcoin. I want you to notice the previous week's low, PWL, was at the 27,100 level. I was watching this level really closely. Now switching to the daily chart of Bitcoin, I want you to notice this, daily equal lows level. Extremely significant and important equal lows. Let's check out our order accumulation in 15 minutes. Remember this range? Where does this range happen? Just above the weekly low, just above the daily equal lows. So, what is the lesson and sign here? Particular lows and highs are quite critical, and some order accumulations become above or below these lows and highs. However, not every weekly and daily low will cause a rally. If that were the case, I would just send orders to each high and low and become super rich. We need other signals. Rallies require multiple signals. This brings us to third signal, the power of 3. Now, I can find the power of 3 in every chart with every single time frame. It happens millions of times a day. We need only the important ones which are at significant key structures. What are these? Powerful demand and supply areas such as order blocks, breaker blocks, mitigation blocks, large imbalances, or important liquidity hunts. This is how we determine our entries. Let's get back to our chart, checking the 1 hour time frame. Remember our range right here, weekly low and the daily equal lows. Let's focus on the left of the chart, right at this area. Let's zoom in. I want you to notice this imbalance, our gray box from my tweet. And right below, the significant order block, one of the big pillars of the rally signs. But why this OB? There are millions of order blocks. Remember, large imbalances colliding with order blocks are super order blocks, are dragon fruits. How many of you checked this? Probably zero, because you are not carefully watching the left of the chart. Here is where the rally happened with a zoomed out view. Let's focus on the order accumulation here again. So in my Twitter post, I already noticed the upcoming power of 3, the significant accumulation and the significant manipulation. This is one of the reasons I posted the tweet and I said a big move really soon. So up until now, what do we have here? Order accumulation confirmed. Weekly low hunt confirmed. Daily equal low hunt confirmed. Important imbalance and order block confirmed. Shaping PO3 confirmed. I saw all this happening at that time. All was great. I predicted the rally, but how to enter the rally? It's absolutely useless to me if I have no way to enter. I want you to notice the swing low. This was the most critical swing low in your entire life. I call this super inducement point. Why? Weekly low hunt, daily equal low hunt, fully filling 1 hour imbalance, tapping the 1 hour order block, hunt of the internal liquidity of PO3. All great. Which swing high created the swing low? This was the market structure break identification. Of course, you could have gone down into 1 or 2 minute charts and found micro MSB and made a sniper entry below, but I did not bother at all. After the structure shift, notice the imbalance created here in 30 minutes. Basically our entry point. My initial target were obvious, this specific imbalance and liquidity. This is how I made my entry, right before the big rally, the range explosion. If you switch the chart to 5 minutes, you can notice this was the area of huge displacement, which caused the support and resistance flip and the breaker block area. As you can see, the price moved 10% around my entry point. I actually do not care about rallies because I have rules. 2R or 3R profit, lock it, and get out of the market. Simple and efficient and consistent. My final words about rallies. They are extremely hard to predict and takes a long time to happen. Multiple elements have to come together. It does not happen very often. For example, hunting for weekly low is not enough. It's just a small part of the equation. But this video now you understand how is a rally being prepared before it happens. Some of you can master this if you want. You have all you need in this video. Watch it for 5 times to digest it. Okay folks, with this video you have learned amazing smart money concepts. Range trading, imbalance trading, power of 3 trading and liquidity hunts. All these are extremely critical for professional and successful day traders and scalpers. I hope you subscribe to the channel and like the video. Thank you. Please take care and see you soon.